People often ask me how the current crisis is going to shape the global business environment in the near future. And I do think and believe strongly that the policy responses that we have seen and that we are currently seeing are of such magnitude that they will actually have a big impact on the business environment for the 5 to 10 years to come. Let me give you an example. What we are seeing in the United States right now is a massive amount of liquidity being put into the economy by the Federal Reserve Bank. Ben Bernanke, the Federal Reserve Chairman, has just announced that the Federal Reserve could triple the size of its balance sheet. Now, we have never seen that. That means a huge amount of money, a huge amount of cash being given to commercial banks and being put into the US economy. What will be the consequences of such a strong policy response down the road? Obviously, here we have a risk of an outburst of inflation in the next 5 years, say. In theory, what the Federal Reserve Bank can do when the economy turns around is to pump back this liquidity out of the US economy and to raise the interest rate in order to offset inflationary pressure. I believe that Ben Bernanke of the Federal Reserve will be able to do that, and therefore that we will not see down the road a massive inflation outburst in the United States. That is, I believe we won't see inflation rates on the order of 10 to 15%. But I may be wrong. And indeed, it may prove infeasible for the Federal Reserve to tighten monetary policy fast enough to offset inflationary pressures, which will be undoubtedly building up once the economic downturn is over. If this is the case, and if inflation does pick up in the United States, then we could have a relatively nasty scenario unfolding for the world economy. And I think businesses should take this scenario into account when they plan for the future. What could be happening? Well, if we do have inflationary pressures building up and an inflation outburst, then this would have major effect on portfolio reallocations worldwide. As we know, there are quite a few agents right now who are overweighted in US dollars. Very famously, the People's Bank of China is holding over $2 trillion of dollar assets. But it's not the only agent. We have other central banks who are also overexposed to the US dollars, as well as private investors who are overweighted in dollars. Well, if it is clear that inflationary pressures in the United States build up, there will be massive portfolio diversification and possibly portfolio flights, capital flights out of the dollar. What would be the consequences of this? Major interest rate hike in the United States. Now, this would weaken an already weak US economy, and this is not good news for international activity around the world. As we have seen, the world economies are not decoupled from the US economy. So this would really be bad news for global demand if we saw massive interest rate hike in the United States. Furthermore, these portfolio flights could also lead to a major depreciation of the dollar, which would in turn feed into investors' decisions and create more portfolio reallocation worldwide. This is a very nasty scenario because a lot of emerging markets are pegging to the US dollar. They would see inflation rate going up as well. And again, the whole world economy would be hammered by such an outcome. I believe this is not the most likely scenario, but we should always put some probability on this happening.